Good morning and thank you for joining us on Morning Markets from True Potential. Today we'll focus in on what's been happening in asset markets over the past 24 hours. Really, if we look at equity markets, they tried to gain a little bit of poise following the moves that we saw on Monday on the back of the increasing concern around Evergrande, the Chinese property developer, and the repercussions that that could have. We've also seen equity markets in Europe and the UK yesterday really move in a more positive direction. Some company-specific news there was helping, particularly those travel stocks, those impacted by the removal of the restrictions on travel to the US, really benefiting from that. And then the other thing that's been a common theme over the past number of months is just the ongoing corporate activity. And we saw that again yesterday with information coming out that Entain, the owner of Ladbrokes and Coral, was maybe going to receive a takeover bid by one of its US rivals. Moving across into the US, we saw US markets follow both Europe and the UK higher initially, but as the day moved on, they did start to fade. So we did see the S&P very marginally lower at the end of the day, Nasdaq slightly higher. I think the other thing over the past number of months, indeed, what we've been talking about is rising input costs and rising raw material prices. And just this morning, looking through a number of charts, one that did catch my eye was just the iron ore price, crucial raw material for steel manufacturing. But what can you see here? And I've just put the chart on the screen now. You can see we saw iron ore peak just a couple of weeks ago, really, towards the end of July. And then subsequently, we've seen it fall back to around, I think in the chart, it's about $117 a tonne from north of 200. So really a fall of some 40, 45, 46% over that period. Quite significant when we look at that. Again, this is tied back into some of those other themes that we've been discussing, the impact of regulation in China, and specifically regulation around the steel manufacturing sector. It's also, I suppose, linked into property, Evergrande, etc., and just what that means for property construction going forward. So just illustrating the real linkages within the global economy from commodity prices, policy changes, and the challenges that certain areas of the economy are facing. Just looking to the day ahead, we'll hear from Chairman Powell of the US Federal Reserve following the Fed's two-day meeting. I think really there, close attention will be coming to his press statements really about the direction of policy. Also, market expectations today are around that they will start to reduce or taper that support that they've got into the financial markets in come November. Again, just there's a lot of things happening in the background. Interesting to see if we get more detail on that. And I suppose also just the direction in general that the Federal Reserve are thinking about rates, given that inflationary backdrop that we've been touching on, the temporary nature of that versus the more longer term nature of some of those inflationary forces that have been discussed. Just in Asia this morning, some commentary that Evergrande has reached agreement with some of its bondholders for an interest payment. It's a rather vague statement. It probably looks more like a sticking plaster as opposed to a solution to that issue, and it's something that is certain to rumble on over the coming days. But we'll see how that evolves. We did see the PBOC in China inject a little bit of liquidity into the market. I'll leave that there for today, but please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.